Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. First thing we're looking at here, chart of the market. This is the E-mini S&P 500 futures contract front month. And looking at the last print of 828.50, the market continues to paint itself into a corner. We'll look at that in a second on the daily chart, but as you can see, these are our intraday dynamics, our proprietary indicators, suggesting to us where the market is more than likely to go. Here is today, Friday, the 13th of February, Valentine's Day weekend. Hope you guys have something planned for your honeys for the weekend. But there we have Friday, Thursday, Wednesday, Tuesday, and Monday. We mentioned last Friday that it was a very nice day in the market last Friday. Had a nice uptrend day. Look at this, we had all green. We did anticipate the move to continue, albeit the very strong and significant resistance on the daily chart of the from an intermediate term trend following perspective, and the market just wasn't able to surmount that resistance. We did have full bullishness on the day, and we did get a close near the upper echelon of the day's range, near the high of the day. Monday, what happens? Well, as you can see, we really did need to look at price. If you compare all this extreme bullishness to this, just simply petered out. Just wasn't going to go anywhere. What's happening with price? Boom, 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 boom. Just bumping up against that 890 to 9 or 870 to 875 level in the E-mini S&P futures contract. Just wasn't able to surmount it. We did get the double top there and a lower high, which was a doomsday scenario, and a triple top. So a lower high, the triple top, boom. What do we get on Tuesday? Certainly a strong move to the downside. We had a bearish trap, just filled that real quick, tested the underside of the trend, and looked down at the full bearishness here. Once we broke below the low of the early session, got an errant retest of the trend, but it was just all downhill from there. On Tuesday, a turnaround. Tuesday at TAT was the session, and it was certainly anticipated given this extreme scenario that we had, this extreme negative divergence here on Monday. Suggested the market just wasn't going to move higher. If it's not going to go higher, it's going to go lower, or at least chop around. It did chop around on that day, and then Tuesday accelerated to the downside. Wednesday comes along, and we actually get a divergence in the opposite direction. Not particularly as impressive as it was Monday, but on Wednesday we did get the slight bullishness, bearishness, just a mixed picture. And what does the market do? Of course, it trails to the side. Horizontal was the trend that day. And then we get the move on Thursday. We get a nice bearish gap lower as the market continues to coil itself into a corner. Again, we'll look at that in a second. But this was a bit anomalous. We did have some bullish indications there. We did have the bullish divergence the day prior. We did have the double bottom here, and just an explosive move was the move in the late session of yesterday on Thursday. Very nice move late in the day, suggesting that there was strong support there. We did get the double bottom. Where does the market go right now? Hopefully, we do continue to expect the market to go higher, so hopefully it will go higher. We don't want to break to new lows, although a lot of people are saying that we're going to. And if we do so, then that'll be the case. But we're going to go ahead and switch over to chart of the daily. If we look at intraday today, again, just another mixed picture. The market is just simply choppy at this stage. And that's where you have, so we had a nice little run to break above the high of the prior day yesterday, and a higher, very strong resistance coming in right here from Wednesday. So 840 just is not going to get surmounted today. It doesn't look like. We do have bearishness here, slight bearish, accelerating here, bearish. So triple, quadruple bearish picture here in terms of our intraday dynamics, so definitely wouldn't expect to make a new high today. But again, as mentioned, the market does remain choppy, and there it is. We moved to bullish there on official market timing perspective after booking about 500 points in gains from a discretionary perspective. And where's the market gone? Nowhere. It is simply based from 800 to 900 for 5 months. We'll call it 4 to 5 months. Here's the corner. The trend is generally the trend will break the back of the horizontal, be it support or resistance. And again, we're not looking for that to happen. We don't want that to happen, but it does look like it could happen. Again, we're officially bullish from a directional movement perspective. down here. Actually, that's bearish from a directional movement perspective. Intermediate term is coming on board to support the bearishness. We do have short term bearish to neutrality in terms of momentum. We do have the intermediate term bearish scenario. Again, bearish to neutral, we'll call these, but we're leaving them bearish. From a trend following perspective, short term bearish, intermediate term bearish, longer term bearish. For our intents and purposes, everything would be a discretionary bearish bias, but again, we did take that advantage of that extreme move lower and move to the bullish side, where we remain. Again, if we get below 800 to 790, we may look to switch to neutral. At least certainly not going to go to bearish, but switch to neutral and wait again for another opportunity to get back in on the bullish side again. However, if we do get above 840 in the futures market, we need to get above 830 here in the cash. If we do see an explosive move higher, with some momentum behind it in volume, yeah, we're certainly going to look toward the 950 to 1000, 950 to 1050 level, we'll call it. So there's the market analysis. We need to switch over. Again, we continue to chop around in our stuff as well. I'm sure you guys are. Here's a couple of systems that have been doing really well in this market, just kind of catching all the highs and lows. Our S&P system 2.0, about 5 or 6 years old. S&P system 1.0, really catching some nice winners there on the long side, catching it on the short side, going long again yesterday, booking some profits. R2K system 2.0 doing similar things. R2K system 1.0 not quite as good, but did catch a winner and is certainly in a winner again. So, where have our portfolios been? Let's go ahead and take a look at the 6-day. Kind of chopping around. The MAPDT had been holding relatively well from relative perspective, but certainly down the worst, or we should say the most, in the last week. So definitely a great opportunity to get into the MAPDT, which, if you look at the longer time frame, we'll call it 139 days, has definitely outperformed all the other portfolios. Up 619% is the MAPDT original portfolio. Up 600% nearly is the dual day trader. But over the last 6 days, actually, let's look at the last 20 days. I thought we had that. I guess we don't. Yeah. Actually, we have it right here. So there we go. Last 24 days. The most. The heaviest loss was in the Delta B, so that would be a great opportunity to get involved with that. From a relative standpoint, the Swinger DT looks like it's been performing pretty well, up 15% over the last 6 days, so has been outperforming. If you guys are interested in Swinger DT, we do have a promotion going on for the Swinger DT, but over the last few days, there's last Friday, up 17,000 for black, down 3,000 for black the day next. No trades for the dual day trader, small losses. Kind of a mixed scenario on Tuesday was the case. Wednesday losses, Thursday losses, and today we're about flat. So it has been a choppy environment to the down, with an advantage to the downside. So anyone waiting for a drawdown in one of our portfolios to get stopped, we generally have drawdowns like this maybe once, twice a year. This is the opportunity to get in from a really arguable safe relative term standpoint after the drawdown, not after a big run up. So, but if you guys are interested in the Swinger DT portfolio, you can go and compare it. Actually, just go to the website. You can just go to the 2008 portfolio returns. You can look at the Swinger DT, the traditional, the one we just showed you, or the best one we offer actually right now is the Swinger DT 3.0. And that's right here. Just go ahead and click on that, open that up, and you can enter promo code video. Just go ahead and add a card. It's $2,900 for that. It has a lot of systems of the Swinger DT original. Enter promo code video right there, and you'll save $500 on 2 units. Be $5,000 instead of about $6,000. So if you guys have any questions, go to the website, chat with the support team, and we hope you have a great weekend, nice romantic weekend. We'll see you next time.